Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Mark R., Dave V., Andy S., and Cindy W. We've got a returning guest on the podcast today. Mr. Dan O'Flaherty is with us. Dan is the Chief Executive Officer of Versamet Royalties, a royalty and stream business that is focused on precious metals as well as selective base and energy metals. Versamet has an existing collection of cash flowing royalties and streams, pending further acquisition of cash flowing assets recently announced. Versamet also has a portfolio of development stage and advanced exploration stage royalties geared towards significant growth of the business in the coming years. Subject to metals prices and market conditions, the company is expected to produce approximately 20,000 gold equivalent ounces during 2026, highlighting significant growth of the business. Versamet Royalties is currently listed on the Toronto Venture Exchange under the symbol VMET, but is in process of upgrading its listing to the New York Stock Exchange and the Toronto Stock Exchange. Mr. O'Flaherty, it's great to have you back on the program.
Thank you for having me again. Happy to be here.
Yeah, Dan, great to have you back on. And you guys have been busy and really firing on all cylinders. At least from our desk, you have been working quite hard on a lot of things here. And it was just a few months ago you came on to introduce Versamet for the first time to our audience, since the company has announced a number of key events, including a new transaction with Appian Capital that adds a silver stream from a zinc mine in Namibia, as well as a nickel royalty from a Brazil nickel mine, for an initial cash payment totaling 125 million US dollars and up to 45 million contingency cash payment. Break that down for us and also the key items on this transaction.
Certainly, we're very excited about this transaction that we just closed with Appian. It is the acquisition of two high-quality, long-life, cash-flowing assets, highlighted by a very significant silver stream on the Rosh Hashanah mine in Namibia. As you mentioned, it's upfront consideration of 125 million, with additional 45 million dollars of contingent payments based on certain milestones. This is a great transaction for us. It's right in our target zone of what we're looking to add in terms of there is immediate and strong cash flow out the gate. As well, both assets have growth catalysts, which I'll get into, beyond the initial cash flow. They are in the hands of a very capable operator with Appian in mining-friendly jurisdictions. So when we look at it, we're adding a lot of cash flow right now, predominantly silver, with expansion and mine life extension potential, good operator, mining-friendly jurisdictions. So it's highly complementary to our existing strong cash flow and precious metals portfolio of royalties and streams. So that's the high level on the transaction itself, and I'd be happy to talk about the assets individually.
Why don't we do that now? Have you go back through both of these projects are quite interesting. The whole deal is fantastic, I think, overall here. And I think as the years prevail here, even with the planned expansions of these assets, this is going to be a great deal. Go ahead and talk about that. You pick your country first.
Sure, I'll start with Rosh Hashanah, which is an operating zinc mine in Namibia. It does have a significant lead and silver byproduct credits. We at Versamet are acquiring the silver stream. It is a 90% silver stream with a 10% ongoing payment. This is a long-term operating mine. It's been operating for 55 years as a producing mine. Appian is currently undergoing the RP 2.0 expansion, which will essentially double throughput by 2027. And again, this is a very long mine life. And over its 55-year operating history, its mine life has been measured not in years, but in decades. And we certainly expect that to continue. So we're seeing next year alone cash flow, but by 2027, essentially doubling throughput. So that will provide immediate cash flow and growth as well. We had the benefit of visiting the site in Namibia. Great run site, very strong operator. That will be a core asset for Versamet going forward. The other asset in the portfolio that we acquired is 2.75% NSR on Santa Rita polymetallic mine. It is primarily nickel, but there's also copper, gold, cobalt, and PGMs, and the NSR covers all revenues of the operation. Right now, it is currently producing as an open pit, but Appian is evaluating a long mine life underground potential, which is what our contingent payments that I previously mentioned are linked to. So when this underground project moves forward, it is a well north of $10 million per year royalty, well into the 2050s. So when we look at these two assets together, two operating mines, they both have growth catalysts ahead of it and long mine lives. So very exciting for Versamet to be adding these into our portfolio.
More to come here as these get underway, these expansions. Existing cash flow right now, plus more to come in the years ahead as these expansions get completed. And really, this is pretty much geared precious metals. There's a little bit of base metal stuff in there and specialty selective metals as well, critical metals if you want to go that way. A good add here. Exciting to see this come into the financial results coming in the months ahead here. Let's hold up on that for a moment. Back in August, after you and I last talked, the company announced second quarter earnings. I think that's also a key event here as well that I think is important and it has definitely supported the share price here. Cover off those results on second quarter as well as how operations are going with the key cash flowing royalties and streams.
Versamet is very much in a ramp up mode right now. So each quarter is going to be improving on the previous quarter. So we'll continue to see record quarters, which is very exciting for us. And just looking at the growth trajectory of the company, 2024 we had approximately 5,000 gold equivalent ounces. Versamet for 2025 is expected to have just over 10,000 gold equivalent ounces to Versamet's account, and that is growing to 20,000 gold equivalent ounces in 2026 as a result of this transaction. The previous forecast was 15,000 GEOs, and this transaction will add 5,000 GEOs, so essentially a third of the company at much less than a third of the company's value was added to take us to 20,000 GEOs in 2026. So each quarter we're seeing that growth reflected. In Q2 specifically, some of the highlights were the incorporation of the Colpa stream, which we acquired in May. Acquired that from Endeavour Silver, a copper stream on a silver mine in Peru. That was the first quarter that we started receiving revenues, given that we acquired it in Q2. So that was a new contributor to the Versamet portfolio. The Kiaka mine came on stream late in the quarter, which came ahead of schedule and under budget, operated by WAF. So that'll be a key contributor to gold equivalent ounces going forward. We also saw continued ramp up at two assets that we have in Canada, a stream on the Greenstone mine owned by Equinox and a royalty on the Blackwater mine owned by Artemis. So each of those contributed to a very strong quarter. And I think we touched on this, when we spoke in August, as to one of the catalysts for Versamet going public in May of this year is that we're already making money. So this is a cash flow positive business with only growth in that cash flow ahead of us.
Dan, thank you for that. That's good. Appreciate you walking through those results. A lot of stuff happening here, and definitely these projects. Some of them here are in startup mode as well, ramp up, working out kind of kinks and getting to steady state. So we're going to see more results come in, most likely positive in the coming couple quarters here. So good information on that. So yes, you guys are definitely putting together a lot here and appreciate that work. You guys also announced that you're in the process of upgrading the listing to the Toronto Stock Exchange as well as the NYSE Amex. Talk a little bit about how that process is going and when you would expect to see each of those upgrades potentially completed.
It's very near term. So both the TSX listing should happen in October. With respect to the U.S. listing, we're very excited to be listing in the United States. We are talking to both the New York Stock Exchange American as well as the NASDAQ. So we expect to make a final decision on that in the next week or so. And really, it's actually the current government shutdown in the U.S. that's our only holdup as we're waiting for our final comments from the SEC. But provided that shutdown ends this month, I would expect both listings to occur, both the TSX as well as the uplisting, as well as an initial listing in the United States to happen in October here of 2025. So very near term.
So you guys are speeding right through that quite quickly. I think well ahead of what folks are expecting out there. Good information on that. Yeah, hopefully the clowns at the U.S. government will get their shutdown over
Yeah.
with. I think it's just political theater here, folks. You got to look beyond some of this headline stuff. But trust me, they'll fund themselves because it's self-interest.
Once they get going, it'll be a great catalyst for Versamet to be listed in the United States. It opens it up to an entire new suite of investors. We should see volume and liquidity increase. So historically, we've seen a value re-rate from that, additional access to investors. So, right now is a good opportunity before those listings hit later this month.
Be interesting to see what ends up going for your decision as to whether you go NASDAQ or Amex. That'll be an interesting one. They have their pluses and minuses for sure. So be interesting to see what you guys ultimately decide on that. How about capital structure here? Why don't we move into that just briefly here? With the current transaction, obviously the balance sheet is changing a bit here with that credit facility changes here. And then also, in order to do this listing and affect that listing on the NYSE Amex or potentially the NASDAQ, why don't you start by just covering off the shares outstanding now because of the consolidation, and then also the key shareholders on the roster?
Of course, I'll touch on the capitalization and the current shareholder base as well as the debt profile as well. We've got 93.4 million shares outstanding. That is following a 5-for-1 consolidation that we effected in September. The reason for that consolidation was purely for the US listing. So that is now in effect, and we have 93.4 million shares outstanding. Our largest shareholder is B2 Gold at 33%, Sandstorm at 25%, Equinox Gold at 13%, and insiders own 12% as well. And I think it's very important to note the strong insider ownership as that aligns for success management's views with all shareholders. You'll also note that we had 3 strategic shareholders on our registry, which is a great positive for Versamet in terms of the support and having long-term cornerstone shareholders. On the flip side, we do want to focus on building and diversifying our shareholder base, which is one of the notable reasons for listing on the US is to build that capital markets profile. And I think a real opportunity for us to, increase the brand awareness of Versamet. With respect to the debt position, this transaction was fully financed with debt. We have a strong access to capital with National Bank and BMO in Canada, who are our lead lenders and provided that facility. How that compares to our cash flow, the next year we should be doing $70 to $80 million in revenue, even higher at spot prices. This is a 90% plus business. So this is a couple of year payback and manageable to pay back under 3 years here. I think it's also important to note that we didn't issue any shares as part of this transaction. So the entire accretion, and it is a very accretive acquisition of these two, of the stream and royalty, will accrete to all shareholders.
Yeah, I think that's interesting that you guys didn't do that on this case here, but certainly given the roster already, got a lot of key folks jammed in there. And obviously future transactions, I think part of, as you and I discussed in the past introduction, we discussed the attractiveness of Versamet shares and the willingness of some of these production assets out there to take shares because of the portfolio and upside that Versamet provides. So I think that's important for folks to remember as they look at this as well.
Well, there's one really unique benefit on this transaction itself. We look specifically at Equinox Gold and B2 Gold on our registry. When we did due diligence on the Santa Rita mine in Brazil, Equinox actually has the Aurizona operating mine in Brazil, and they were able to send someone to join our due diligence team that had previously worked at Santa Rita. So that was a very unique benefit. And then when we go to Namibia, B2 Gold has a major operating mine, Otjikoto there, and they were able to send a member of their team that had previously worked at Rosh Hashanah to bolster our due diligence team. And these are deep technical teams that had intimate familiarity with these producing mines. So that is a massive competitive advantage on the due diligence front. And we have a strong technical team ourselves, but being able to complement that with members of our very supportive shareholders, I think just shows the support that B2 and Equinox has with us and their alignment with our transaction. So there's a kind of a unique benefit there on the due diligence side.
Absolutely. I think you guys have a deep bench and certainly a fantastic network there, Dan. So I appreciate you covering that off as far as the due diligence side and the assistance from the existing roster. That's great stuff. Just discussing the revolving credit facility there with National Bank and BMO. just when you guys look at that and considering some of the tools out there, I think it's good here to get your opinion on how you guys look at this, Dan, from a management perspective. But some of those tools out there to issue equity as part of a potential blend to reduce debt in due course as you guys see fit. And of course, basically shore up and prepare for future transactions that would be coming. Would a base shelf prospectus or maybe an at the market program be something that you guys would use? What are your thoughts on those tools? Do you think that they would work? Maybe some downside to that as well. What do you think?
Just for background, we do have a base shelf prospectus in place. I think it's always good to have that flexibility to be able to go to the market subject to pricing. Obviously, I think we'd like to see a deal fully reflected in our share price before we made any considerations to that front. I'm fully aware of the at the market financings. I've seen other companies do them. I think how Versamet would prefer if we ever were to go to market would be to be very upfront and announce it as opposed to trickling shares out into the market. I think everyone's got their own opinions on that, but I'll say to the extent that we were to ever go to market, it would be opportunistic in terms of the market, as well as it would be very upfront and announced.
Very well. I agree with you. The ATM, fully agree with your guys' thinking on that. The base shelf I was not aware of, so that would be error on my part, but definitely good to have that in place and good to have your opinions on that as you guys look to find the best methods to grow this company, create that shareholder value, and of course, later on down the road here, consider other things like dividends, which we talked about in the past.
It also reflects how deep our pipeline of future opportunities is. We have a number of other irons in the fire with respect to accretive acquisitions that we could potentially pursue. So we always have to be very focused on our capital structure.
Very important here. And definitely as you guys look to stair step this forward, as you guys are already doing here in quite impressive, significant fashion here. Well, just looking ahead here, Dan, on potential future and further transactions in 2026 potentially, any specifics areas of existing production and development segments of the market that have your attention, maybe specific metals here, and then also maybe there's some well-behaving or different behaving jurisdictions that have your interest. Any comments on that?
Certainly. Well, for 2026, right now, the Versamet revenue split is approximately 83% precious metals, comprised of 67% gold and 16% silver. The remaining 17% is a blend of copper and nickel. Right now, we're very happy with that metal mix. This transaction brought the silver into our portfolio, which we're very happy to see. Especially with the silver price having some very strong momentum. I think it's highly complementary to the gold. Looking forward, most of our opportunities are in precious metals that we are evaluating for acquisition. So we'll continue to be focused on precious metals. Really, the copper and the nickel, which make up less than 20% of our revenue, they're opportunistic in terms of the pricing. And at this point in the cycle, I'll use the word again, opportunistic to be adding it. They're also incredibly long mine life assets. If we look at the Santa Rita NSR that we just added in Brazil, this underground potential combined with the existing open pit will take it to 30-year mine life. So that is just really nice to have in a portfolio as a long-paying, uncapped royalty. So we'll continue to focus on precious metals primarily, secondarily, some base metals. It is still cash flowing or clear path to production assets that we are looking at. We're not looking at very early stage, so we are looking at production. And it's diversification as well. We have a very well-diversified portfolio. I think that is key to the entire royalty and streaming businesses, maintaining that diversification, and that includes geography as well. Namibia and Brazil, which we just added here, are very mining-friendly jurisdictions with long histories of mines and mining operations. So we'll continue to focus on that as we look to add to our portfolio.
Good. I think both the jurisdictions are fantastic adds. Namibia, we like a lot. Lots of stuff happening in Namibia from, gold, existing gold mines in operation, plus development projects on the gold front, potentials for more copper there. Of course, you have things like diamond and uranium, even a little bit of oil and gas now. So very interesting. Namibia has been a great place, I think, to be exposed to for the natural resource sector. Well, Dan, short of any other comments that you wanted to add, why don't we wrap it up for this update? For potential investors who are listening in, Versamet Royalties has a market capitalization of about $1 billion Canadian dollars. Why should the company be considered within the institutional, family office, and retail investors portfolio at this stage?
Thank you for having me on. I think the concluding comment I have is we've got three very strong legs to our growth. First is organically through the existing growing cash flow in our portfolio through expansions and new buy and builds. As I mentioned, we have 5,000 GEOs in 2024. This year in 2025, we'll have over 10,000 GEOs. Next year in 2026, that it will be over 20,000 GEOs. And then in the medium term, grow to 25,000 GEOs. So that is very real, tangible, and strong growth that is organically and already in the portfolio. The second is through new acquisitions. We've had a great track record of doing over $400 million of acquisitions in our 3-year history, predominantly done over $1,000 ago in the bull price. So we're seeing great results on that. We've got a very deep team and pipeline of opportunities to continue to execute on, and given our track record, I expect we'll continue to deliver. And third, on the capital markets profile, where we're about to list in the United States and uplist in Canada to the TSX. So that'll bring higher liquidity, diversified shareholder base, and likely should expand our research analyst coverage as we've got a lot of attention on the transaction that we've just done. So, with those three legs to our growth, I think it's a very exciting time for existing Versamet shareholders as well as any incoming new Versamet shareholders.
Very good. And I would certainly agree with that, and full alignment, of course, just the capital structure as well for folks looking at that angle, the cap structure and the partners, very sticky long-term holders, folks looking to take this all the way through to potential future acquisition as you guys build this out. That's certainly one of the outcomes, but a lot of the folks on the roster don't have any reason to get rid of their positions. So that's a fantastic adder. Dan, for further information about Versamet, how can folks contact the company?
All of our contact information is on our website at www.versamet.com, Versamet.com.
Dan, keep up the good work. Looking forward to seeing more progress and updates in the coming months, and we're looking forward to talking again soon.
Thank you very much. I appreciate that.